Good morning, everyone. Welcome to Windsor Brokers Live Daily Market Outlook. It's Monday, 12th of November 2012, first day of the new week. Pressure on the single currencies, sterling, dollar higher. These are the highlights of the beginning of today. Despite some corrective action seen overnight, euro comes under pressure with the focus again at 127 support zone. Also, the sterling again is below 159, important support, while dollar Swiss steady just under 95. Gold remains steady around 1734, our initial target after a brief break higher, holding the recent gains from 1672, while crude oil is around 85.77 currently, following spike to 86.75 last Friday on the recovery of fresh lows from 84 zone. Overall outlook still for oil remains quite negative, though some near-term positive tone sees potential for some corrective action. As said, the euro holds steady, still above 129. This is 127. This is the 2-month low. After Greece's ruling coalition secured enough votes in Parliament on yesterday's meeting to approve the 2013 budget law, but its potential for gains was tough to be. It was quite limited by impending meeting of Eurozone finance ministers that is due to come later in the session. Deputies allied to Greece's three-party government approved the budget. That was basically the weekend's highlight, with a comfortable majority of Parliament's 300 seats. But worries about Greece still remain as some uncertainties, despite some uncertainties have been removed. It's still I would say some of the commentators and analysts still see a lack of bearish momentum for a further sell-off and further push through 127, although technicals are doing quite in favor of such a move. From the Eurozone finance ministers that will meet today in Brussels, they will discuss whether to release a new tranche of funding to Greece, with the German finance minister Schäuble told a German newspaper yesterday that the troika of international lenders to Athens was unlikely to deliver its full report in time of Monday's meeting, and the Eurozone likely will not release the new funding despite Greece's tough 2013 budget, as there is no agreement yet on how to make its debt sustainable. Though Athens is set to get 2 more years to cut debt. This is according to official comments from the other side. As said, the gold remains steady after posting its biggest weekly gain since late August on safe haven buying, mainly driven by worries of the United States could return to recession if Congress fails to reach a deficit reduction deal. The President Barack Obama will meet business, labor and other leaders this week ahead of negotiations with top lawmakers to avert sharp tax hikes and deep spending cuts that loom at the end of the year. Gold set holding around 1735 levels, steady, mainly driven by uncertainty of investors of the current fiscal situation in the United States. This is one of the burning problems, as well as crisis in the Eurozone. Beginning of the week sees basically the Euro's overall negative tone has been accelerated on loss of important 128 support, and overall bears remain in play, with some comments, as I mentioned previously, of some analysts that see some consolidation rather than further extension lower at or above 127 level. We're going to take a look at technicals now, as today calendar is showing nothing significant. It's quite poor, whatever has been released already during the overnight, and then no significant releases that would have impacted the markets more seriously. So we're going to take a look in the currencies and commodities and see the latest movements. As shown, near-term bears on euro on hourly chart are fading, near-term bulls on hourly chart are fading following the bounce of 126.89 last Friday's low, with gains being capped by descending 55 days exponential moving average at 127.38, with the indicators still in the negative territory, though 127 again proved to be quite a good support, as fresh weakness at the beginning of the European session was contained just under this level. Overall negative tone, better shown on the hourly chart, where we have descent from 131.38. Lower top still keeps the bearish tone firmly in play and sees the more potential towards the downside, with the break, of course, of last Friday's low at 126.89, which also marks the bear channel support to open way towards dynamic support at 126.55, 90 days moving average, and the 50% retracement of the larger 120.42 to 131.70 ascent at 126.06. That is seen as our downside target in the near term. As said, bears were confirmed on the loss of 200 days moving average at 128.30 approximately, and loss of 128.00 psychological support and the previous range floor. Now confirming the bearish stance, also the signaling double top formation 131.70, 131.38, that could be triggered for a further bearish action of the single currency. Conversely, any correction higher first needs to clear the initial barrier overnight's high at 127.38, reinforced by descending 55 days exponential moving average, and the Fibonacci levels. This is approximately also around 23.6% of the down leg from 128.75 to 128.689. While any significant bounce higher needs to clear previous strong support, now acting as a resistance, and the peak of 9th of November last Friday's high at 127.87. This is approximately 50% retracement, and of course 128.00 as a previous strong support, in order to avert immediate downside risk. Further extension higher will also face another strong barrier set to 128.80, 129.00. Basically, a regain of 129 is set to shift the near-term focus higher and prevent the pair from further sliding on descent from 131.38 to 126.89. So basically, we are seeing 127 still as good support and holding, despite quite negative technicals, with further consolidation seen under 127.80, 128.00, while penetration above these levels, and especially 200 days moving average, would be probably a signal of some stronger corrective action. Otherwise, any correction, any bounce that will be contained by these levels would be seen as corrective, and the preceding fresh slide towards our initial targets 126.55 and the 126.06, 50% retracement, as well as 126.00 round figure support. Also, sterling is hovering around the 159 psychological support and the Fibonacci support, following overnight's brief corrective action to 159.14, with this morning's fresh weakness hitting 158.80. Important break below 159, 159.10 that marks 38.2% Fibonacci retracement would likely open way for a further bearish extension on the down leg from 163.08, 21st of September peak, and the target, our initial target on the downside, dynamic support 200 days moving average, currently at 158.48. And negative tone dominates on the daily chart, with the break of important support, near-term support at 159.50. This is the last week consolidation floor that was interrupted by a spike lower to 159.30. Has accelerated the losses last Friday, and resulting in the posting fresh low this morning at 158.80, keeping the near-term bears firmly in play for extension towards initial target 158.48, and then 158.00 is around figure support. On the upside, 159.28, 159.55, this previous support zone now offers initial resistance. However, any improvement in the current structure requires basically regain of 160.00, approximately 38.2% retracement of the down leg from 161.74 to 158.80, reinforced by descending 55 days moving average. Break above 160s to provide the near-term relief and prevent testing of the downside levels 158.50 and 158.00, and allow for some stronger recovery. As shown on the daily chart, basically the pair broke below its recent range established in at the beginning of October. That was on the downside limited by 159.50, on the upside by 161.70 zone, within main bear trend line of 163.08, keeping the upside capped. It's at 160.30, so basically clear break above 160 and the regain of a trend line resistance. This is also equivalent to Fibonacci 50% of the down move from 161.74 to 158.80 would provide relief. Otherwise, a likely scenario would be revisit of 158.80 and 158.50 and 158.00. Dollar yen is currently consolidating recent losses on the pullback from 80.67 2nd of November high, with the 79 support, psychological support, coming under pressure on last Friday's slide to 79.06. Indecision is shown now on the last Friday's doji candle. We can see it here. That might be signaling some consolidative action ahead of above 79.00 as a strong support. Basically, the pair is seen has so far reached 79.55. This was the top of the overnight's trading, approximately just above 23.6 retracement, and below the 55 days exponential moving average that is currently starting to move sideways. That could be a signal of some further consolidative action above 79. Main risk is seen on loss of 79. That is approximately 61.8% retracement of the upleg from 77.94 to 80.67. And the break here could be a trigger. Basically, will confirm the top at 80.67 and open way for a major corrective action of the larger 77.12 to 80.67 rally. With basically we have the double Fibonacci support at 79.00 as previously mentioned, 61.8% on the 4-hour chart, and the 50% retracement of broader 77.12 to 80.67 rally. Break of this could be a trigger for a stronger reversal, stronger corrective action of 77.12, 80.67 rally. On the upside, initial barrier is now 79.55, overnight's high. Then we have Fibonacci 38.2 at 79.68, while only break above 80 as psychological barrier and also equivalent to 61.8% retracement would provide relief, and basically would prevent pair from a further slide and a possible break below 79.00. Technicals on the 1-hour chart are improving now, moving into the positive territory, while 4-hour studies are still quite negative and still sees the downside more vulnerable as the downside pressure is increased by a bearish crossover of 20 over 55 days moving averages. with 20 days one currently standing at 79.67, and the 79.81 is the 55 days one. A break of this and the 80.00 would provide relief. However, as said, more downside pressure seen according to the 4-hour technicals sees quite likely scenario of further extension and further corrective action, especially that the pair lost the 200 days moving average currently at 79.65, and the daily indicators are now pointing lower from ADX studies. Bears remain firmly in play on the 4-hour chart. Bears are also in control of the daily ADX, so more focus, I would say, at this point seen towards the downside. But again, Doji left last Friday sees the warning that this we might be entering a near-term consolidative mode ahead of a fresh direction of dollar yen. And finally, dollar Swiss is attempting this morning again at 8.9500, last Friday's high seen at 94.97, with brief corrective action being contained last Friday and overnight at 94.66 by hourly 55 days exponential moving average. Positive tone still dominates on the near-term chart studies, with the all indicators in the upper part of the positive basically territory, seeing potential for a test of 95.00, that is round figure resistance, and 38.2% retracement of larger 99.70 to 92.13 descent break here to open dynamic resistance 95.31, 90 days moving average ahead of a more significant 96 zone where we have 50% retracement and psychological round figure resistance. So far, bulls in the near term remain firmly in play and see potential, especially after the pair broke above 94 200 days moving average and the previous double top at 94.36.30. That now increases hopes of a stronger recovery of 99.70 to 92.13 descent, with the, of course, clearance of 95.00 required to confirm the double bottom formation 92.37 and 92.13. That will be quite a bullish signal for the pair for the further recovery, as set 90 days moving average, and the 50% retracement would be seen as next targets on the downside. Immediate support lies on lows at 94.66. Also dynamic support ahead of a 94.30 zone, the previous highs and the low of last Friday, correct, 94.27, while slide below 94, that is around figure, and the 200 days moving average would be quite risky, as it would bring the pair back into the previously established range. The gold remains steady following last Friday's rally to fresh high at 17.38, with the rather sideways movements seen after a strong rally from 16.72 low of last week, peaked at 17.38. Basically, the yellow metal reached our initial target at 17.34. That marks 50% retracement of the down move from 17.95 to 17.95 to 16.72, with the current consolidation seen preceding a fresh rally. However, studies indicators on 4-hour chart are quite toppish at this point, with the momentum already descending and the MACDs showing initial signals of a possible turning lower, while RSI holds along with the 7 days moving average just below the overbought territory. On the hourly chart, it's rather a neutral mode at this point, following price moving within 17.27 and 17.38 range. Break of either side on the, according to the hourly studies, is set to show the next direction. But as said, overall positive tone still sees potential of further retracement of the down leg from 17.95 to 16.72, especially in light that most of investors are now jumping into the safe haven gold according to the current uncertainty in the major world economies, and basically break above previous last Friday's high at 1738 is to open 61.8% retracement at 1748, and the previous high of 17th of October at 1753. That would be our next upside. The targets on the downside, the current consolidation low at 1727 approximately offers initial support, reinforced by ascending 20 days moving average that is underpinning the advance on the bullish crossover at 1709. Break below 1700 at this point would be risky, as this would signal lower top and possible return down to 1672, low of 5th of November 2012. And finally, the crude oil. Let's take a look on the daily chart. Basically, the downtrend from 100.72 remains firmly in play, as the pair is still in the third wave of 93.47 previous consolidation range top that was cut by descending bear trend line, with the recent last week's bounces higher being capped again at just under the trend line at 89.20, with the fresh slide posting new lows just above 84 psychological support. Currently, the current move is seen just as corrective so far, with the 86.75 high seen so far to provide the near-term relief and prevent immediate downside risk. Outside this point, a break above 89.20 previous high, and more significant 90 barrier, which is close to 61.8% retracement of the down leg from 93.47 to 84.05 at 89.87 would be signaling a near-term base. But as said, this is still part of the corrective action this is still seen as a corrective action, and basically break above 90. This was this is what I mentioned, I think, in our previous sessions, would provide the relief. Overall negative tone from the other side still keeps the downside in focus, and the loss of 94.00 as psychological support, and the recent low will open immediately 83.64 10th of July low, and then 80.50 calculated extension of the third wave from 100.72, third wave from 93.47. That was all from my side. Please, if you have any questions to submit now, so I'll be glad to answer. Okay, we have question for dollar Canada. Let's put the screen. Take a look on the daily. The pair is currently hovering around the 200 days moving average, still unable to clearly break. We have two attempts. The moving average is currently at approximately near the parity level, where the price is currently hovering short of 1.0037, 50% retracement of the larger 104.44 down to 96.31 descent. Basically, the bullish tone, overall bullish tone, is still in play, but clear break above 200 days moving average is required, and regain of 50% retracement is required to confirm the recovery and the open way for a further extension higher. On the Ichimoku studies, daily structure is positive as the pair emerges out of the cloud and holds above, well above the moving averages, while near-term structure is, I would say, still showing a sort of a range at this point, with downside being limited by 98.73 and upside still around 1.00 2030 levels, with the still positive tone dominating on the 4-hour chart as price holds above 20 and 55 days moving average, and the bullish crossover is currently underpinning the action. Immediate support is the moving average is 99.81 and 99.65 ahead of static support at 99.46, and the risk to be seen on loss of 98.73 low of 7th of November that might be triggered for some stronger corrective action with the retracement levels of the up leg from 96.31 to 100.31, standing at basically the 98.73 is approximately 38.2%, and this would be seen as a trigger for a further weakness in case of a break below. Otherwise, clearance of 200 days moving average and 50% retracement at 100.37 is to open 100.83, which is the high of 2nd of August, and 101 psychological resistance, and then 101.33, 61.8% Fibonacci retracement of down leg from 104.44 to 96.31. Any further questions, please? Okay, no more questions for today. I would like to thank you all for attending our sessions, and believe that we provide you good information and good information for your trading. Keep an eye on the market. We expect to see you again tomorrow morning at the same time at 8 o'clock GMT. Until then, I wish you a nice day and very profitable trading. Good luck.